So what I'd say is I think this financial roundtable is a good sign of some positive things. They brought us in. The Chinese today have the largest pool of consumer savings in the world. They've got the second largest economy, but they've got a less developed financial market. And American companies are great in capital markets, in asset management, in retail banking. And they were asking the leaders of a bunch of financial firms to come in and make concrete proposals about how the market in China could open up, how they could give us more access. So it was a very productive discussion, and I think it's a good sign that below the big headlines, where there is a fair amount of tension, there are good things on the ground. There's an openness to reform and openness to the U.S. moving into that market in a bigger way. So I continue to believe.
You're still optimistic
I'm still
here that
optimistic.
This gets, I mean, it just keeps getting worse. It's not getting better.
Yeah. My optimism comes from the fact that it's in the party's interest that if we stop trade and investment between these two big countries, it wouldn't be good. And there's a recognition on both parts that a rebalancing has to happen. The question really about is the degree and the pace of that rebalancing. So if you look at NAFTA as an example, there was a lot of tough, headlines 3-4 months ago. Today, that seems to be moving closer to resolution. I think China will take longer, and I do not think it'll be a straight line. But in the fullness of time, yes, I think these things will be resolved.
You don't see it impacting your ability to do business at this point?
Not at this point. I mean, despite the headlines and tension, U.S. companies have continued to operate in China. That's our hope going forward.
We've talked not that long ago about the strength of the U.S. economy. So let me just leave it at this, sort of broadly speaking. The emerging markets have been suffering. So have some of the markets outside the U.S. In fact, there's a fairly significant divergence in terms of the performance of our stock markets, for example. Is that a concern to you? And does it reflect perhaps larger concerns about the overall global economy?
Well, I think the emerging markets are a bit of a particular case in the sense that their dollar-denominated debt since the crisis has gone up threefold to $3 trillion. As the U.S. economy strengthened, their currencies come under pressure, makes it harder for those borrowers to repay. Then their central banks, to strengthen the currencies, raise rates, which puts pressure on their economies. That's a tough cycle. They're facing that today. I don't believe that necessarily signals that we're going to have a major challenge in the U.S. It could create some banking issues for some of the more exposed financial institutions, but I don't see a domino effect from that causing U.S. growth to, go down sharply. We still see incredibly strong signs in the U.S. Consumer confidence, 18-year high, unemployment claims, 50-year low, small business confidence, the highest it's ever been. All those signs seem to point to more investment. It still may mean challenges for values given what may happen to rates. But in terms of economic activity, we're pretty positive in the U.S.